Hello, friends, fellow traders, and investors. Welcome to Equity and Commodity Market Live Discussion with SD. मैं हूं SD Shanandu Das. I'm a multi-asset trading and investment specialist. This is definitely not any kind of trading recommendation because trading is risky. And I believe risk management rule number one, you should never listen to others and jump on a trade. You can take guidance. You can, for example, those who are Rainbow members, you are using my setups, but ultimately we come up to a decision making by ourselves. That is the right approach towards trading and investing. And it generally has inherent risk in it. You should note that majority fail here, but those who can become successful tends to do pretty well. So thank you everyone, those who have joined live, and also thank you those who are watching this video, part of this video later in the YouTube channel. First, I will like to take you to my website. This is the website. Under upcoming schedule in future, I'm expecting very soon, you will be able to see not only the upcoming sessions, some of them could be written as free session like this, which anyone can join, and some like these are for Rainbow members and it will be specifically mentioned. So anytime you can come up, like Sunday Stock Storm, next episode is coming on the 23rd. You will go under offering, check out which one, say Sunday Stock Storm, and the link to join will be available somewhere in this part. Now this video is kind of also a warning from my side towards to me, to generally Joe's followers. Things are not looking well right now, and this kind of weakness, especially the US market is important because global 70% market capitalization is in the US. That means if US market drops, almost everyone loses money if they are holding, suppose. So currently US market, this is the US S&P 500 through, just a moment. Through this setup, I can note that the price action is no longer bullish. Short-term momentum has turned bearish. And I have not seen this kind of weakness for a quite long time. In the past few weeks, I've started, and well before, I've started saying that I'm going defensive mode. And in the hindsight, so far, it has looks like paid off. And if it turns more bearish, I can easily expect around 10% decline, 8 to 9% decline in the S&P. But those are not given. Means bigger drop or even smaller drop, and it will not happen in a day. It is likely to happen gradually. But this is overall not a very strong sign that I can see from the US equity market. If I look at especially the tech heavy Nasdaq also. So currently be careful while remaining invested in the US market. Some stocks definitely will still could be strong, but the top stocks, there has been too much overvaluation because 259 PE for Tesla doesn't make sense in historical context from the writings of Mr. Buffett, warnings of Charlie Munger. So best approach currently is to be more defensive in the investment. If anyone can protect money during the down phase and try to remain invested even with, say, the index Bs or ETF, we can do better than the majority. So here my focus, as it is the long-term chart, now be defensive. And I'm very will remain open for a significant turnaround. And the weakness that I'm seeing is not just only bound to Nasdaq here or the US market. Some market like Australia has been weakening for some time already. Hong Kong has gone into a range bound situation, and whereas Germany is also showing weakness. So certain important markets in the world has started to show weakness, and this is definitely a headwind for our market. Means opposite side. Headwind means barriers, and tailwind means positive. So a trade agreement can be a tailwind for India, which if I look at in the, this is more short term chart. First, let me to take a look at the risk before I go there, and I'll keep the line chart. In the weekly chart is still not bearish, gradually positive. This is good news for the Indian equity market. This is very important. Risk has gone up significantly, affecting the weekly chart now. India is still not as that bad, and it is not showing long-term turmoil risk. Forward risk measure slightly, मतलब आगे का risk आने वाले दिन में upcoming months and week elevated. If I look at the through this same thing in the daily chart, it is significantly bearish for equity as an asset class. That's why we are seeing a down move in S&P, in Nasdaq, Australia, and on some other markets, Germany. Many areas are starting to see weakness now. So overall, this reading, given the weakness, is, I'll say, significantly positive for India. But that does not mean we should not apply caution, because if I look at the weekly chart of Nifty, it is still bullish in my setup. So that means it is best, if I want to remain in the stocks, Indian stocks will not be a bad idea. And in that stock market, given there is headwind, better remain on the stock still going strong and not starting to show weakness. Because even if that does not fall significantly, it will increase the chance of it being range bound. So Nifty daily chart is also positive overall. So Nifty is taking its time around the 26,000. So slight zigzag makes sense. Also, the problem is there are risk on equity as an asset class. Overall, asset class के ऊपर risk has gone up. I look at the 125-minute chart, and there is significant issues. As I get a full red candle, that means price action has turned bearish now. And as price action is now bearish, but overall, if I look at the readings, that's not that bearish. Trends are still there strong. But the loss I can see, if I make the setup into detail, loss is there definitely in some momentum. So riding momentum stocks, the stocks which will fire very fast, those are may not be the best ones right now because of this correction headwind. And better those are stable, let them go. Gradually it is going, given no major sign of weakness, where the high beta, they will give you higher fluctuation. Now may not be a great time for those. But overall, India still looks bullish somewhat. So positive stocks, I'll not just press to exit. We should be very careful. I will be very careful in choosing the bad ones out. Like, given the current condition, it is my choice, first of all. It is not that anyone should be influenced by this. This is what I'll be doing and I am doing. Say Maruti, at this point, given the situation, I'll have to change the setup to stock master. So overall, given the situation, I will not prefer, even if I don't expect a big decline in Maruti, I'll not prefer to remain here right now. Rather, if given the choice, I will remain in this one where it is still humming strong. It may not have to go faster, but as long as it's the stocks which are not showing weakness, I will not be personally jumping to exit. But the stocks which are showing weakness, I will not remain in them because of hope. But if because risk goes up in India, which suddenly can go, just one comment, then Trump, we are not yet ready for the trade deal next year, maybe. That will be sufficient to add more downside pressure and headwinds to Indian equity market. But overall, the approach will be now more defensive. From the assessment of recession risk, I know that we are in the late part of the cycle. I don't know when this recession exactly will start hitting. So given I believe that we are in the late part of the cycle, as Nifty is still bullish, I'll not shy away. But my posture is defensive and, like always, to remain with the strong stocks. Another very interesting thing that is going on, I'll say go here, change the setup properly. Commodity is the gold area. Gold has given awesome rally over the years. Say weekly chart will start with. It has started to show weakness. I can see significant momentum loss in case of gold. Buyers are still strong, but not as strong as before. And clearly the momentum reading and the momentum other readings suggesting the significant momentum loss in gold. If I increase the strength meter, which is very useful for me to get an early idea about the strength that I'm seeing, gold, silver, aluminium, majority of the metals and crude is especially weak. Strength wise, gold is declining. So not a fantastic scenario. I still don't have any plan to exit the SGBs that I'm holding. But other just swing investment, those like gold bees, they are could be at risk of correction. Weekly chart is to be consulted more for investing. It has largely no usage in case of trading. In the daily chart, I can see this was not fully unexpected. In the best case, I will expect gold to remain range bound, at least for the time being, between somewhere around 3,820, 30 to the upper zone of 4,300, mid zone of say around 4,050, 100. So gold in the very short to medium term, my expectation is it could be range bound a bit. But that will be very clear soon, because there is a bearish possibility also, because if gold able to break down the levels like 3890 and sustain below, there will be a risk gold could be coming down towards 3,500. But at this moment, I do not know which outcome will be there. 2 hour I use more for trading, and I don't need it to know where the gold will go as long as I have the understanding of the probabilities. And also, if you look at the line chart, it is clear. Last night it was beautiful break, and with the breakdown, we can go even say Indian market is closed and I want to take a bearish bet. There are at least ways like exchange traded fund called inverse exchange traded fund, GLL, ultra short gold. This exchange traded fund will go up in value as gold goes down. So I'll once again, this is closed, so I will apply rather to the gold chart here, and we can see clearly also from the Dow structure that it is bearish. So I will be more inclined to play the bearish strategies in gold. And currently I think the gold is coming down, at least testing a break of 4,000, possibly reach out 3,000. We can draw some levels, of course. So one level is 3940. So 3940, 3980, 50. Once gold reaches these levels, from there we are likely to see that I will expect any meaningful correction on the opposite side. Currently, it is significantly bearish in the short run. And I use the short-term chart for my trading. So in the short-term trading chart, I remain bearish outlook with the gold. And similar, I will say the outlook is for silver. Silver futures also, this I remain bearish as well. Very, very bearish. So my play, whenever possible with manageable risk, it will be bearish opportunities in silver in the short term. Gold also in the daily chart we have seen. Similar, my thinking is in the based on the daily chart, it could be in for a range bound price action for this time until the early next year. More decisive action, real big breakdown, like gold has done so well in the past years, big breakdown I will expect more on the next year. It will be clear, I expect to be by next year, whether gold is breaking down. In the sentiment, this is the my CNN fear and greed index. I use the macro micro, and special discount link is available to the members. You can use it. And here I can see it has gone to the fear zone. Matlab extreme fear in the market. So extreme fear means there is also a good chance of bounce back. So US market, I'll take a quick look in the daily chart also. It is bearish definitely, but we can expect after a more drawdown, maybe 6,500 area, to expect a bounce back. So fear is reaching about a level in the index where the risk of opposite side bounce goes up. So in the upcoming next week, in the later part of the week, after a strong bearish move, there will be a good opposite side correction as per my analysis. So that's all, friends, about today's live discussion. We had a good 20-minute discussion on gold, silver, international equities, Indian equities. Thank you everyone for joining. If you have If you have any questions, I'll be happy to take it.